My name is Linda Abraham, and I am the president of Accepted and the moderator for today's webinar. Welcome to the 6 Steps to Understanding International Student Loans, to be presented by Molly Dineen, Senior Relationship Manager at Prodigy Finance. A question before we start. This is for all of you. I'd like you to respond in the question window, because we're going to use the question window for your answers as well as your questions. And that is, where are you located?
Linda, if I could interject, it looks like we have a few folks that are saying they're not able to hear. Has that been rectified?
It seems like a lot of people are hearing, because we have 2 people from India, somebody from Toronto,
Excellent.
somebody else from India. So I think that the people having audio problems probably have a problem that's specific to their machine. Venezuela, welcome. Colombia, India, New York City, welcome. We'll accept people who are located in the United States also. Bahrain, wow, okay. We share a last name. Anybody else want to share where they're located? If you can't hear me, you're not going to hear what I'm about to say, but I would say check your audio settings. Let me respond to those people. Another India. Okay. Yeah, if you can't hear, follow the instructions I just sent out. Lagos, London, Ontario, Nigeria. Woo, really international crowd. Okay, great. And then I have a couple other questions for you folks, and I'm going to pose in the form of a poll that's going to be on your screen, so you don't even have to hear it. Are you currently exploring options for applying, or are you already applying? Are you currently applying, or are you admitted to graduate school? Which of these options best identifies you? Please click on the screen, click the option that best identifies you. Okay, great. We have 71% having voted. Can we get it over 80%? Can we get it over 80%? Yes, we can. 5, 4, 3, 2, 1. I'm closing the poll with 82% having voted. And here are the results. 50% of you are exploring options for graduate school. 39% are applying. And 11% are already admitted. Congratulations to those of you already accepted. That's wonderful. Okay, and then I think I have one more poll I want to ask right now. Let's see. Next one is, what year do you intend to start graduate school? The options are 2017, 2018, 2019, 2020, and 2021. Those years sound so strange. If you could indicate the option that your desired option, that would be great. I guess 2017 is getting kind of old at the moment. All right, we're at 76% having voted. Can we get it over 80? Yes, we can. 5, 4, I actually have done. 5, 4, 3, 2, 1, with 91% having voted. Fantastic audience today. Here are the results. 87% of you want to start your graduate education in 2018, in other words, next fall. 13% are planning ahead for 2019. Congratulations to both of you, or at least, I mean, even those planning for 2018, in my view, are planning ahead, and that's really good. Okay, and I think we'll save the last poll for a little later. Actually, no, I'm going to ask that now also. Okay, this is the last one for now. What percentage of your studies do you plan to fund with loans? The options are none, 0 to 25%, I should say 1 to 25%, 26 to 49%, 50 to 74%, and 75 to 100%. Could you please indicate which best identifies you? Okay, which do you most identify with? And again, can we get it over? You are a fantastic audience. We're already over 80%. Can we get it over 90 again? 5, 4, 3, 2, 1. Okay, almost. We're at 89%. I'm still going to close. That's a great response rate. And I'm going to share the results. 3% are planning to fund 0 to 25%. 3% are planning to fund 26 to 49%. 26% are planning to fund 50 to 74% with loans. And 68% are planning to fund 75 to 100%. So obviously that's the bulk of you. Let me just make some notes here. So less than 10% of you are going for less than 50% loans, and that's actually pretty typical, I think. But I'm sure we'll hear much more from that when Molly talks to us in just a couple of minutes. Now, a few housekeeping items. Molly may ask a few questions during the presentation and ask you to raise your hand in response. You can do so by clicking on the hand icon, two icons underneath the horizontal arrow on your control panel. As usual, and as I mentioned earlier, we're looking forward to answering your questions, and we've set aside time for Q&A. So feel free to enter your questions in the question window, and I'll choose those that have the broadest application. And if we don't get to your specific question, we'll provide several options for you to get answers at the end of the webinar. No matter where you're at in this very international crowd, you need to face reality, and clearly you're here because you've done so. A graduate education can be invaluable. It also can be expensive, very expensive. And before you can benefit from the education and the degree, you have to figure out how to pay for it. We here at Accepted, we've been admissions consultants for over 20 years. We've observed that endlessly obsessing about financing your graduate education won't help, and ignoring the issue can be absolutely devastating. We'd like to recommend a middle ground called purposeful planning. I don't think it's actually an original concept, but it's a good idea. And that's why we've invited the folks from Prodigy Finance to present to you today. Prodigy Finance was started by 3 INSEAD MBA graduates who experienced firsthand the difficulties of financing an international graduate education. They subsequently set up a platform to provide reasonably priced loans to international graduate students and above average returns to investors. Our presenter today is Molly Dineen. Molly is a senior relationship manager at Prodigy Finance with 9 years of experience in the higher education sector and a specialization in international education. She is passionate about scaling, growth, and shaking things up in higher ed. Prior to joining Prodigy Finance, Molly managed University College Dublin's North America office, worked in the nonprofit sector, and for the Australian Embassy. She graduated from the University of Dayton and is driven by measurable human impact and access and equity. Molly loves to travel, and County Kerry in southwest Ireland is her favorite place in the whole wide world. Molly, the floor, or should I say the mic and screen, are all yours.
Thank you, Linda. And thank you to everyone who's joining us today. It's such an honor for us to get to be a little bit of your journey today and your exploration of that next exciting step for you. So with that, we have, in the next hour, we're going to take some time to kind of understand the basics of international student loans and your financing options. And so that as you approach this, whether you're one of those lucky students who has already gotten accepted, or whether you're those that are exploring your options or soon to be accepted, so that you know that this is something that you can approach with a little bit more knowledge coming out today, and that you feel equipped to kind of consider that large investment that Linda eloquently described. At Prodigy, we do firmly believe that education is that great investment, but it is a large investment. And so with that, we want to explore kind of how we can best approach that and how you can kind of go into this with a clear mind, knowing exactly what your options are for funding. So who are we? Linda gave a great kind of background on who we are. We are certainly a passionate organization, mission-driven organization that actually now has 130 plus employees. We are in our 10th year, and since then we have funded over 7,100 students. Those students we're very proud represent, like this audience today, the world. So we have 127 different nationalities coming to us. And one thing that makes us quite different is that we exclusively lend to students that are studying outside their country of origin. At our core, we believe that talent is borderless, and we also want funding to be borderless. And so we are a fintech company. We support the top universities globally. The degrees that we support are across business schools, but not exclusive to business schools. So if anyone out there is considering something in law, policy, even an MS degree or computer science, we also support those schools. However, the bulk of students we've supported to date have been studying at some of these prestigious universities, and many that aren't listed on this slide as well. So today, what are we going to talk about? We're going to chat about the ways to pay for an international degree, what a cosigner or a guarantor is, and if you need one. We're going to look at the application process, should you choose to enter it. And then coming out of that application process, what are these terms of interest rate, and how does that relate to APR? What does that mean as far as your total cost of lending? We're also going to look at the next step then of how and when funds would disperse, and ultimately upon graduation, how you would move forward to be set up for success in the repayments process, demystifying that end of the spectrum as well. So diving in, options to finance your degree. First and foremost, of course, are scholarships. Scholarships are great because who doesn't love free money? And not free money for that matter, hardworking money that you've earned, but naturally, many of you have likely started to explore these options, things like school financial aid, as well as home government options. So look at the government that, in government schemes that might be available to you coming from your home country. Those are quite popular. And naturally, even if it's a small scholarship, can help kind of weigh out that total debt burden on yourself. There's also many philanthropy organizations that offer scholarships for students, high achieving students like yourselves who are looking to do and advance themselves with a degree abroad or even at home. So please do exhaust those options. In addition, Prodigy is very excited to be offering a scholarship ourselves. So we offer, this year we're offering 10 scholarships to students, and all you need to do to be considered for those is actually have an application with us and ultimately be attending one of the programs that we support. They are for $10,000 each, those are automatically kind of given out to our community members, and that is debt that is just directly forgiven for you. So it's actually value-wise much greater than 10,000, but we'll dive into that a little bit later. Finally, once you've exhausted your scholarship offering, then you want to look to savings naturally. Both yourself have likely been planning this and thinking this out for a long time, and in many cases, your family or extended network may have been supporting you in that. So having those conversations and making sure that you understand, what you have in your savings, both your personal and or family and extended network, so that you can look at this realistically. For remaining needs, and I do like framing it that way, for the remaining needs, there are education loans. So we're going to spend a little bit more time diving into the types of education loans. Ultimately, we believe that getting into university should be the challenging part, and that funding should not be a barrier of access. And so if you've kind of exhausted those first two channels, there are an option with loans. So we want to take some time to dive into demystifying that language a little bit. So if you're looking at a loan from your country of origin, you would have some domestic banks that will offer loans, and the requirement for that, if you are looking domestically, will be collateralized usually. And what collateral means is just something that you are putting up that exceeds the value of the loan that you are taking. So in many countries, you would see this as something like a family business or home or property. It can take other forms as well, but it is something that allows traditional financing institutions to understand that there is a value being put up in balance to extending you a large loan. If you are looking for the country that you are studying in, let's say you are looking to study in the US, for example, then banks here to extend you a loan are traditionally going to request a cosigner. And what a cosigner means is someone who would also be willing to sign on and ultimately be responsible for that loan alongside you. So should you, for whatever reason, not be able to pay that, then they would be responsible for paying that loan for you. In addition, it would be something that would be reflected and weigh on them as far as credit goes. So those are kind of the two traditional banking offerings, both domestically as well as for students going to their country of study, whether it's the US or the UK or Hong Kong or anywhere in between. Prodigy kind of saw this landscape, and when we saw a very large gap here, our founders, being sitting at INSEAD, decided to look at it differently, and so actually entered into what was a case study that kind of created the origin of the company, which is that a collateral as well as a cosigner is something that is a very big burden and often a barrier that shouldn't be. And so Prodigy Finance was born out of that. So what we do is offer a loan for students that get into the highest achieving programs by offering no cosigner and no collateral. Essentially, we just need to see that you were able to achieve a letter of admit into one of our stellar programs that we work with, the programs you're exploring now. And that allows us to say that you have the talent and the ability to succeed. And that on that basis alone, we're able to issue you a loan. As such, we find that many students explore us alongside, of course, traditional banks to alleviate that burden on family or even on themselves of that cosigner or collateral. That in its core is what makes us different. We believe in a borderless credit model that would allow you to say yes to your graduate offer and ultimately get a fair loan on the back of that. We're able to do this all online. So we do have a borderless credit model that is an online application. It is data analytics driven. We believe that it has a very transparent process, and that you will see a high ROI, not only for yourself, but also that our investors who ultimately fund these loans, going kind of around traditional banks, also in their returns. So for us, it's a win-win. We're also very excited to be shaking up kind of traditional loan terms. And so what that means is not only that no cosigner, no collateral, but also that we work directly with schools to disperse on time. So it's one less thing that you need to worry about. And also that we have terms that are written by and for students. We're able to do that because we go directly to investors, and we're able to sell your great stories. We're able to say these students are, and history has proven that the programs they're getting into mean that they are set up for success. And because of that, we know that working in collaboration with the schools, as well as our investors and you, our potential students, or a community of borrowers, that we're able to create kind of a nice cyclical structure. Our favorite stories, by the way, are the ones when our borrowers go on to pay off their loans early, which many of them do, and then ultimately become the next generation of investors. So now kind of jumping into a little bit more concrete, how would you apply as an international student? And whether you're an American student going abroad to do your degree, or whether you are a student who is calling in from Lagos, as we saw, or calling in from Mumbai or anywhere else in the world, there is kind of an online application that you will access the same. And so as that, we'll kind of go through the steps with that. And please, as Linda shared, we're happy to take any questions. And so we'll certainly kind of adapt to anything we're not covering. So with this, it is a 30-minute online application. You don't need to complete it in one setting, but I have a feeling that many of you might. It is an online application at prodigyfinance.com. It would allow you to enter not only an application for one program you might be considering or have an admit into, but actually into as many as you choose. We realize that many of you might be considering, as Linda's team has probably advised, quite a few different universities that might be a good fit for you in the application process for admit. In addition, we realize that funding is a big part of that. So we realize that your financial option to attend one university might be quite different than the other. And as such, our applications are different depending on the university you're attending. In part, that's because your budget is going to be slightly different. Perhaps you got a scholarship at one university and not the other. Perhaps the cost of attendance is higher if you're going to school, let's say at Columbia Business School in New York City, versus if you're going somewhere in a more rural campus. So with that, we do have asked that you fill out an application per program that you are seriously considering, and it's okay if you have multiple in. In most cases, so over 85% of the time, you will receive an automatic offer based on the information that you have provided. The reason for that is we are a data analytics driven model. So what that allows is for us to read your application and look at not only your history to date, but also the program you got into, the career outcomes we know going out of that program, and allow us to issue you an offer at that stage. We'll talk about kind of loan terms in the next step and demystifying what those mean so that you understand what that looks like if you do go forward and get an offer with us. In a rare case that you're in that 15% and you did not receive an instant offer, I'm happy to confirm that you will receive an offer with us, a response with us, within 5 business days post-review. So in rare cases, there's maybe something that is a little confusing in your application, in which case our team would reach out and make sure that you had, we have a crystal clear picture of who you are so we can make that the most fair offer. After we make that offer, if you decide to go forward, then we ask for your documents. So one thing I want to highlight is that right now, you do not need to have all your documents in place. You do not need to know that you're definitely attending one school or another. And we want to make sure that that's not something that is a burden on you. So it's quite all right if you're not ready to commit to that. In my parting words to you, I will share this once again, but we just want to make sure that funding is not a barrier for you. As Linda was saying, that it's a holistic review as you're doing now of programs, of costs, and of ultimately how you would say yes to get there. And so we hope that this will help demystify that. So that credit model, how are we able to make you an instant offer and what does that look like? Often we get a lot of questions on this because it's quite different than a traditional bank. This isn't us meeting one-to-one and us discussing your family's credit history or your family's property or who would be your cosigner in your domestic country. Instead, we're just looking at that data-driven model. What that allows us to do is look at over 50 parameters that will allow us to make a credit decision based on data. And so the great thing about that is that it is a very straightforward application. We'll ask you things like your work history, how many years, if you have any years experience. If you do not, by the way, that does not preclude you from getting funded. However, of course, if you have more work experience, that is always helpful. We'll also ask for things like your salary history, keeping in mind that our students do come from over 120 different countries, and so we know how to interpret different currencies. That's also a question we frequently get asked. Based on those data points that you input, we'll be able to issue you a customized interest rate, and it will be between 5.5% and 8.5%, plus what's called U.S. Libor. U.S. Libor is a measurement of the current rate of trading in the country. So in the U.S., and it's regulated across the board. There's also Euro Libor, if you're studying abroad in Europe, for example. And we'll dive into what that means a little bit more in a bit. US Libor is something that changes through the life of your loan, whereas you can rest assured that the bulk of your interest rate, that 5.5% to 8.5% that you would be assessed at, will not change over the life of your loan. In addition, our repayment options are based on your own profile. So we will give you a term that is the lowest term that we know you can comfortably afford based on your profile. So that might be 7, 10, or 15 years. In addition, we want you to know that there's no penalties to pay back early, and that most of our students actually do choose to pay back early. If that's something we build into the model, and naturally we encourage. Ultimately, it will allow you to pay much less for the cost of your funding if you're able to ultimately pay back slightly early, and or to pay back before your grace period kicks in. So that's something we'll dive into a little bit later in repayment. On to step 4, understanding your rate and what is called APR. So your rate will be assessed based on your individual profile, and it can be up to 8.5%. And that is a rate that will not change throughout the life of your loan. That rate stays steady and is added on to what the current US Libor is, and that is harvested quarterly. This will allow us to make you an offer upfront that will that can let your mind rest assured that ultimately your interest rate will not change drastically over the life of your loan. The bulk of that will be stayed steady at the profile you have presented in the loan agreement that ultimately, if you decide to sign, and we countersign. In addition, we want you to be aware of the current place of US Libor. Right now, it's about 1.16, for example, quarterly, and that would be added to your base rate. In addition, you'll hear the term annual percentage rate, or APR, and this is something that is frequently used in the US as well as in the UK. It is the standard to disclose the total cost of lending to borrowers. So it's something that is there so that you can hopefully shop around and compare. It's quite common, and so if you're looking at any options in your country of study, or if you are studying, or rather if you're from the UK or from the US, you're likely familiar with this term. However, for those of you coming from outside those countries, you may or may not be. And so keep that in mind, that as you're shopping domestic loans and international loans, to make sure that you're understanding this term. What is APR? So APR is not the rate at which interest will accumulate on your loan, but rather it is that full packaging and the full effect of the financing, and ultimately the cost for you to take out that loan. So to drive that point home a little bit more, we want to show you kind of a representative example. This is a representative example of a student who filled out an application for us, and within moments, their profile assessed them at a 7% fixed margin rate. And so that fixed rate is not going to change throughout their life of the loan. That's the profile that they were given. And ultimately, after they pressed submit, they were offered that 7% over US Libor. US Libor, if we use today's example, would be 1.16. So that's looking at current Libor and putting that on top of your fixed margin. That would be the interest or the rate rather at which you would be accumulating interest on your total loan. So in this example, it would be 8.16. In addition, you would have the annualized interest, and you would have the administrative fee. So the administrative fee, meaning the cost of us underwriting and processing your loan. For Prodigy, that's 2.5% in most cases. And so instead of asking for 2.5%, for example, of your total loan that you are requesting from us, we lend that to you as well, and we package it together with the bulk of your loan, so that you're not having to pay that up front, and instead you're able to pay that over the life of your loan. As such, just to highlight then, APR in this example for this candidate would be 8.99%, which would be all of these costs put together and averaged over the life of the loan. It is not the interest rate at which you would be generating interest. That is rather the 8.16, which is the Libor plus your fixed margin. And so that's a concept that I'd like you to keep in mind, not just if you're exploring Prodigy, but if you're exploring other options, because it's something that I think is commonly not understood as well as it should be, and not also explained as much as it always should be either. So always ask questions, including if you decide to apply to a Prodigy loan. That's why I love my job. I get to work with brilliant students like you, and hopefully demystify some of this, so that if you decide to make an offer, or rather make a loan agreement with us or with any other provider, that you feel confident in doing so. So I see one question coming here about US Libor, and it's asking whether it is decided for a candidate based on his or her country of origin or the country of education. So that's a good question, thank you for it. Actually, US Libor is not decided based on individual candidates or where they're coming from. Rather, it is something that is decided across the US economy. So you could Google US Libor and see where it has been in the last year. You could see where it's been in the last 10 years. And so that would give you a sense of it. It's actually something that is regulated by the government. So it's not something that Prodigy sets, and it's not something that we would actually look to set for an individual candidate. Conversely, your Prodigy fixed margin will take into consideration all those 50 different parameters in your application, including your pre-study salary, what course and class you're going into, years of experience. So that's going to be more tailored to the individual candidate. So moving on to disbursement. So if you went ahead with our loan with us, you saw a provisional offer, you understood your APR, ultimately you uploaded the documents that were requested from you, which would be 6 documents, things like your letter of admission, first and foremost, your proof of anything from scholarship to sponsorship to savings, if you're using that to ultimately meet some of your cost of attendance beyond your loan with us. We would then be able to issue you a loan confirmation letter. That loan confirmation letter would allow you to go forward and secure your I-20 form. For those of you who are not yet familiar with the I-20, that is the form that ultimately will be processed by your school to recommend you for a study visa in the US if you're studying there. And so with that, you can use you'll need to submit your proof of funding. As part of that, if you are using a loan, including Prodigy's loan, you'll be able to use our loan confirmation letter as that proof of funding. That can green light you well in advance. Then you'll be able to reach campus, where you'll ultimately sign your final loan agreement, allowing us to directly disperse the funds to your school. Ultimately, if you're in a 2-year program, which I suspect many of you are considering, please know that each loan agreement is done with your first year to your second year. Rather, in your first year, you'll have 1 loan agreement. Then in second year, we'll ask you to come back, refresh your budget, and we'll issue you a loan agreement and disbursements for your second year. The reason we do it that way is so that you have the flexibility to decide and refresh what you need in your second year. This may be less or more than you suspected you would need when you were in your home country, as you are today, exploring these options. So we realize that. What we do instead is we'll issue you an offer when we issue you your offer for your first year, as well as a pre-approval for next year. So for your second year, if you're in a 2-year program, that will let you rest assured that you have that funding available, but it doesn't lock you into that. So great, we're jumping through all the fun part, which is your actual study period, that building of a network, those new skills, that exciting internship. You're doing flyingly well, and you're coming up to that repayment. So as much as we don't like to think about this part, I'm glad that we have some time today to flesh out what repayment looks like and so that you can understand that as you're considering your lending options. With Prodigy, you have a grace period throughout the life of your loan. So that means during your study period. During your study period entirely, you will not be required to make any payments. You will, however, be accumulating interest while you are studying. You will also not be required to make any make any payments in the 6 months following your grace period. And that grace period really, or apologies, I should phrase that differently, 6 months following graduation. So this will give you some time to settle in, explore your different job opportunities, maybe even take on some additional costs, as often happens when you're moving city, finding a nice apartment and settling up to get started at your new career. So that's why we have that extra 6-month grace period. After your grace period ends, which is your study period plus the 6 months following your graduation, you will be expected to begin minimum and regular monthly payments until the balance of your loan is fully paid off. So just to give you an idea, when you're ultimately reviewing your contract with us, if you do decide to take a loan with us, it will also highlight something in there for you, which will give you an example of a minimum loan payment. So you'll know that up front as you're exploring in the next few months or coming year for those of you looking at 2018. So after that, when you begin your monthly payments, we ask that you pay them off every month until your loan is ultimately completely paid off, which is a day that I hope you will celebrate and go enjoy a dinner on. I know I did when I recently paid off my own student loans. But what I want to highlight here is a few tips. So one, let's say you are having any struggles, whether this is a family struggle, personal struggle, finding a job, or anything that makes you nervous about going into repayment. Please remember that communication is key. We're a very human organization. We are very compassionate, and we ultimately want to help you get on the best track. So please let us know as soon as if you have any issues with that. I don't think any of you will. I hope none of you do, but just in case things happen. And what we want you to know is that we understand that things happen. We actually have a community suite of benefits that we could help, for example, help you find a better job or a new job if you need that. If, for example, there's any natural disaster, a family emergency, we understand those things too. We ultimately want to work with you one-on-one so that you're able to tackle this, stay on top of your debt, but also not get crushed by it. So please just remember, and that goes for any loan that you might consider, whether it's with us or another provider, communication is key. And my best pro tip is that if you can increase your monthly payments, so your minimum monthly payments is what will be expected of you upon 6 months after graduation. But if you're able to increase those even just slightly each month, you'll be able to drastically reduce the total cost of lending. In addition, if you're able to start your payments earlier, you'll be able to greatly reduce that as well. Remember, you're not going to have that compounding interest going on quite as long on a larger amount. So if, for example, you're a student that goes forward, gets a great opportunity, and is able to sign a confirmed job offer at or before graduation, please consider using a signing bonus, if you have any left over and you're able to comfortably do so, to pay off some of your loans. Ultimately, it will save you drastically in the long run, even if it's just a small part of it. So why Prodigy? And giving you kind of a little bit softer about us as well. We disperse directly to the school. We work with the school, so in fact, we have a great job. I love my job in that not only do I get to work with students like you who are exploring, but ultimately, I hope to meet you on campus and get to buy you coffee and see how things are going. So we have relationships on campus, not only with our community members, but also with the administration. So we, in many cases, know folks in the financial aid office, admissions, sometimes in the program offices as well. we like to have working relationships that allow your life to be a little easier, in that we can disperse directly in conjunction with tuition due dates. We can also hopefully be more than a lender to you, be a support system, be supporting student life on campus, and ultimately there so that you feel a sense of rapport and support should you need anything or have any questions throughout your studies or beyond. Our process is online, as we talked about the application, and you will see kind of in our loan agreements and our communication and our offering that there is a constant opportunity to connect with somebody like me to answer any questions you have on a specific case. In addition, we are so proud of our Prodigy network that continues to build. So just with student supported, we're over 7,000. We also have many investors on top of that, and we see this, and of course our school partners as well. We see this as an extremely strong network. Imagine graduating not just from your, let's say, your MBA alma mater, but also being able to tap into the top 100 universities globally and their networks through the Prodigy Finance network. So we're very proud of that. We have opportunities for you to do that. We have programming throughout the year. Let's say when you do your internship, you find yourself in a new city. We're very excited to have opportunities for you to connect, do workshops, as well as things like happy hours, just to get to know each other. In summary, Prodigy Finance is proud to offer a no collateral or cosigner option that works with schools, allows for early repayments, and in fact encourages them, and also offers pathways and support for you in your career and personal life. At the center of that, it's all about community for us. So that's who we are, and we're so excited to be able to say hello to you today, and thank you for tuning in, and I'm so excited to hear kind of any questions that you've come up, and also hear anything that Linda's perspective and anything that we can cover in addition to help you today. Also, here's my face. It's nice to put a name to a face often, not just a voice. But please, if you have any questions following this presentation, naturally, as you know, Linda's team at Accepted is always there to support you. And likewise, if you have any questions on the funding side or exploring funding options with Prodigy, please let my team know. We're very excited to have the opportunity to work with you. And at our core, we just want you to know that funding should not be a barrier to explore a top degree. If you have the drive and the planning, as you are doing right now, to get into a top program, that there are funding options there for you. So thank you very much with that. I would love to turn it over to you, Linda. Linda, are you still with us?
Yeah, I'm sorry, I had muted myself during your
No problem.
talk. I want to thank you for a wonderful presentation, and we have lots of questions here, so let's go straight to them, okay? Ashwini asks, could you please elaborate on cost of attendance?
That's a great one. Thank you. So cost of attendance is something that is set by your university. So the university you're attending will have a financial aid page, and I definitely recommend you checking it out if you haven't yet. It will not only lay out the cost of tuition, but it will also outline what they expect for your program is the cost of living and other fees associated with. So for example, it would allocate then the cost of, let's say you were attending Chicago Booth. It would also outline what the university expects and what the average student needs to have for living expenses. That includes rent, groceries, books, and supplies for your classes as well during your study period. So please don't just look at tuition when you're considering programs. Really look at that cost of attendance. And for Prodigy, we look at that cost of attendance as well, because we want to make sure that you're set up for success, not just with a loan from us, but also meeting that total cost of attendance. A Prodigy loan, by the way, can cover up to 80% cost of attendance.
Right. Okay, Raj asks, can you please talk about why only 80% of the cost of attendance is allowed?
Great question.
Yeah.
Perfect follow-up.
Yeah.
So, so for what we want to ensure is that you're not over-indebting yourself in this process. Prodigy is very proud to be a very responsible lender. And because of that, we have had, by the way, less than 1% defaults in our entire 10 years of lending to over 7,000 students, less than 1% defaults. Why is that? In part, it's because we really believe that it's important not just to borrow the maximum that you can, but instead to build a financial plan that makes sense and sets you up for success. As part of that, we want to ensure that you have a little bit, frankly, of skin in the game. And whether that's coming through a non-debt source, such as a scholarship or those lucky sponsorships that are few and far between nowadays, but are still out there, or whether that's coming from your own personal savings, we want to ensure that you're balancing your debt with your non-debt funds. And so because of that, along with our investor side, we believe that 80% is a nice metric for that. In addition, we have data that backs that up. So in rare cases, there are some campuses that we might explore more in the future if we have data that shows that does not over-indebt students and does not ultimately impact the repayment side of things. So we might consider it in the future, but right now, 80% is where we're seeing that the data backs up that it is the right thing to do and it ultimately sets you up for success.
Okay, great. Thank you. Madeline asks, does the U.S. Libor rate adjust on a monthly basis? And if it does, is that going to affect the interest rate that students pay? Does their rate adjust with the Libor, and how often does it adjust?
Great question. It is read, so if Libor as a construct absolutely changes constantly. So you could look at a daily US Libor rate if you wanted to online. That being said, that would drive us all crazy if Prodigy chose to do it that way, and as you as community members needed to track all that. So instead of looking at it constantly in that regard, we do it quarterly. So we will take the quarterly average of where US Libor has been, so over a 3-month period, and we will average that for you. And so during that quarter, the average of the US Libor will be what is added to the bulk of your base there. And so that's how we will assess it, and that is how you will see it on your monthly statements. So you do not need to worry, while you could look online and drive yourself crazy. You will get an email each month with your Prodigy statement, starting from the first month you're a student, by the way. And that will show you not only the amount that you have outstanding as a loan with us, but also for that month, the US Libor calculation that has been used, which would be the quarterly. So it will be the same for 3 months in a row for the life of your loan for you each time. And it will be adjusted likely every 3 months. And so it will go with the economic trends that are going on throughout the life of your loan.
Okay, thank you. I'm trying to use first names, so if I mispronounce one, please forgive me, audience. But Dabaj Yoti asks, can we apply after getting a conditional acceptance from a college, but before paying the deposit?
Absolutely. We encourage that. Okay. We believe that funding option is ultimately something that you can and should be thinking about when you're looking at why or why not to accept a program. And so because of that, we want that to be demystified for you. So yes, please do.
Okay. And again, a related question from Warren. Once Prodigy makes an offer, how long does the offer stand?
Good question, Warren. So your offer will be live, so that provisional offer will be live for 2 weeks. And if we did not hear anything back from you, despite multiple emails to remind you to give us an update, then it would expire, but it could be reinstated at any time. What I would encourage you to do instead is just let us know, yes, I'm thinking about this, but I need more time. Ultimately, we never want timing to be a crunch for you. We also don't want you to have to do multiple applications, because in our model, it's data driven. It's always going to be the same result. So for us, please just let us know if you are, for example, you got accepted into one university, but you're waiting on a few others. That's absolutely fine. We're used to that. So please just let us know, and we'll keep the offer live for you for up to as many months, frankly, as you need. We do ask that you finalize your loan before 1 month to starting. So that should hopefully give you a timeline.
Okay, great. Thank you. Munish asks, if the tuition fee does not have to be paid upfront, but in installments, does the interest accrue on the entire loan from the beginning or as the loan is dispersed?
It is, so interest, that's a great question.
Yeah.
Is paid in for students that are going to a university that has 2 semesters, which many of you likely will. Quarterly would be slightly different, but you can understand the principle here. We will make your payments based on your tuition due dates. So in conjunction with the school, and this is something you don't need to be involved in, we work with financial aid directly to make sure we're on their schedule. We will disperse half your amount, for example, in year 1, in August, let's say, if tuition was due August 30th, we would disperse it a week prior, and you would only have interest accumulating on that first amount that we have dispersed, not the entirety of your loan. Flash forward, let's say your second semester payment is due January 1st, then we would disperse it 1 week in conjunction with the school, directly to the school, and you would see interest start to begin on that second disbursement then. You could imagine then flushing that forward to your second year, and you would have the same process. So you do not see interest accumulating on the entirety of the loan amount at the beginning, and instead it is only the day that the money is drawn down in your name, and we have moved that money in your name, that you would start seeing interest on that amount exclusively. Okay.
Louise asks, what is the average loan you provide to students, or the maximum or the minimum? I know you said there's an 80% maximum in terms of cost of attendance. Is there a maximum in terms of dollars or euros or something like that? Or is there a minimum in terms of dollars or euros? And what is the average?
Sure. So the minimum is 15,000 US dollars a year. So for each year. So if you're in a 1-year program, that's over the course of your program. If you're in a 2-year program, it would be $15,000 in year 1. If you chose to come back to us in year 2, it would be $15,000 as a minimum for that loan agreement as well. As far as our maximum, there is not a dollar amount that is a maximum. That very much depends on the cost of your program. So at some universities, we are able or rather at all universities, we're able to offer 80% cost of attendance as they set it. So it's really based on what they set as that cost of attendance that would determine our maximum. I should mention there are a few universities where we are able to do that 90% cost of attendance. Wharton is one of them, and Stanford is the other right now. Other campuses may come down the line, but that would be up to 90% of their cost of attendance. They're the outliers, however. So when kind of determining, I suppose, an average between all of that, if I include our European partners, as well as our rest of world schools and our US schools, our average loan for a business student is about $50,000 a year. But that's not to say that that's average for any other reason than what students are requesting and their programs. So don't get too hung up on that. There's a lot of variability in that average.
Okay, thank you very, very much for the excellent answer. Just reviewing some questions here. Manav asks, I'm not sure you can answer this one. I would want to borrow the maximum possible amount. Let's say it is 80% of the cost of attendance, or 90% if you're talking about Wharton and Stanford. Can I say with certainty that I will get an approval for the requested amount? I have an excellent credit score.
Very good question. So I cannot promise that you would get that. And what I would encourage you and any other students that are thinking this is to submit the application. So ultimately, we'll look at your profile, and what we want to make sure is that you can comfortably carry the debt you're requesting. So if for whatever reason, so it's great to hear, for example, this candidate has a good credit score. For Prodigy Finance, we realize that some students don't have a credit score yet. This might be your first time exploring a credit product. So while it is good to have it is good for you personally in other regards to have a credit score, it's not a requirement for Prodigy. What we do need to see is that you do not have any poor credit. And what I mean by that is, let's say, walking out of any loans, or walking out of any credit cards, taking out a credit card and never paying it. So we will do that light check, and that is something that certainly could mean that we're not able to lend to you if you have very bad credit, which it doesn't sound like is the case for you, which is great. However, I can't promise that it will be the absolute 80% or maximum that you request. The only way that you can find that out is by filling in our application. In many cases, it will be. And keep in mind, the application is free. It takes a thoughtful 30 minutes to do, and you'll usually get a response right away. So I would encourage you to do that so you can just know concretely for your own personal example. And then to say in any case, so if a student, for example, for whatever reason, let's say a student's been unemployed historically, and their profile is showing a little bit of concern in issuing them, for example, 80% cost of attendance in our data algorithm, then we'll get them the closest we can to what they requested. And so we'll still issue you an offer, even if we can't issue you the maximum in most cases. The only things that would lead to hard declines, which are very rare for Prodigy, would be if you have very poor credit, meaning a history of walking out of credit products.
Okay, great. I'm going to take one more question. We're running a little bit over. Will the Prodigy community help you find a job? This is from Fernando.
Thanks, Fernando. Yes, so we are very delighted to be a part of that. We don't see ourselves as just a lender. That's not who we are at our core. We pride ourselves in that centerpiece of community. And as part of that, we want to be a part of that journey. So whether it's working with your careers offices, which we do across your universities to provide supplemental supports, even from your first weeks on campus. As an international student, there's some things that are slightly different in the career hunt. And we love being able to be a voice in that. We also love hiring, for example, MBA interns over the summer. We love hiring our own students. We have some of our community members that now directly work for Prodigy. And more importantly, we have a great, vast network that is really bought into this idea of global talent and of top-tiered kind of supporting that mobility of it. And so as such, we do have Prodigy Careers as a offering, meaning career supports from career coaching to kind of one-on-one mentoring to help you find, if you're struggling, to find a job or an internship. So we pride ourselves on that, and it's some of the more fun things that we get to do. In addition, for example, to the programming that we run regularly over the summers, so that while you are, in a new city, that you're able to continue to deepen that network and to look at different breakout sessions, like how do you negotiate your salary, or how do I position myself for a promotion. So things like that. We hope to be a part of your career journey, not just while you're a student, but beyond.
Molly, thank you so much again. Before we go, I want to mention something that I should have mentioned before the Q&A, and that is that this is Prodigy's 10th anniversary, and they will be giving away 10 scholarships for anyone who applies to for a student loan with Prodigy. That's just, if you go through the application process, you could end up getting a scholarship. Do I have it right, Molly?
You do, yes. We would love for it to be one of our audience members today. So
yeah,
think about
that'd be great. If you win, please email me. Okay. I want to mention a few additional resources for you on financing your MBA, and you'll be also getting the URLs for these resources. Number one is an article that Prodigy Finance authored called "Tips for Planning Your MBA Budget," and it is at accepted.com/PF, as in Prodigy Finance. I also had the pleasure of interviewing Cameron Stevens, the CEO and founder of Prodigy and an INSEAD MBA grad. And you can listen to that podcast episode at accepted.com/89. Again, if you didn't catch these URLs, don't worry. We will be sending you the links to these resources in a few minutes, so just watch out for the email. You'll receive a survey on your way out. Please fill it out. We value your feedback. And some of you asked early on if we are recording the webinar. Yes, we are. And you'll also be getting an email probably late this week, early next week, letting you know that the video, the recording rather, is available for your review. Thank you again. Best of luck with your application. It sounds to me like it's worth it to fill out that form just to have a chance at the scholarship. So with that, once again, thank you to the audience for your participation, your questions, your answers. It's been a pleasure. And most of all to Molly for the fantastic presentation.
Thank you, Linda, and thank you everyone for attending. It's a pleasure.